Good morning and welcome to the Killik and Co market update. The Russia-Ukraine situation is still very much dominating headlines, and there's a sense that markets will struggle to move much in either direction until we have a clearer sense of what's going to happen here. Here's a chart showing the MSCI World Index over the last 2 years, and you can see that drop that we experienced in January, but since then the market has pretty much been flatlining. Corporate reporting season is still ongoing, and actually lots of companies have been reporting results that have beaten expectations. But despite that, there is a sense that investors are reluctant to add significant amounts of new cash to markets while the Ukraine situation is still looking so uncertain. The oil price is continuing to rise, and Brent crude is currently over $90 per barrel, and that suggests that some investors fear that conflict in Russia could harm oil supplies. Russia is currently the third largest producer of oil in the world, behind Saudi Arabia and the US. Also, we've got the gold price continuing to go higher, and that implies that some investors have been moving their money into safe haven investments. And also this week, Nestle published its full-year results for 2021, and there are a couple of areas that are very much worth highlighting. Sales growth for pet care and e-commerce were both very strong, up 12.7% and 15.1% respectively. We know that in lockdown, lots of people bought pets and shopped a lot online, but it's good to see those two trends continuing even as the economy starts to reopen. Nestle also saw a strong performance from plant-based food, up 16.8%, and Nestle's health science business up 13.5%, and that is the company's nutrition arm. The chief executive, Mark Schneider, who started in 2016, comes from a healthcare background, and he's very much been steering the company towards nutrition. So it's no longer just about Kit Kats. The company now has a lot of healthier offerings too. And finally this week, Airbnb's results are also worth a look. Last week we looked at Disney's results, and we suggested that this year people seem very keen to spend money on experiences, and Airbnb's results very much support that theory. If we compare Airbnb's results for the fourth quarter of 2021 to the fourth quarter of 2019 before the pandemic, we can see a 32% increase in the number of bookings and a 36% increase in the average daily rate. Here's the chart for Airbnb, which only joined the stock exchange in 2020. Being a travel company, the share price has gone up and down as various restrictions have come and gone, but you can see there's been a very notable spike at the end as we've started to move away from the latest round of restrictions. One interesting point from Airbnb's results was that the fastest growing category is stays of 28 days and longer. So that perhaps implies that people are starting to take advantage of being able to work remotely, and perhaps that might be a common feature of life looking forward. Moving ahead to look at next week, we've got results out from some of the big UK banks, Lloyds, HSBC and Barclays, so we'll be waiting to hear what they say about the potential for future interest rate rises here in the UK. That's it from us. Enjoy the weekend, and we'll see you next Friday.